Is the New Jersey housing market loosening up, or are we seeing two markets at once? If you're that buyer that's been waiting for a market cool down, a correction, or maybe even a crash, this is definitely the episode for you. And getting an idea on what is actually happening in a variety of markets in what I call the bellwether markets that really tell the true story of what's happening in New Jersey real estate based on location, because we're going to see when we dive into this data, not every location has the same story. So let's dive into some numbers right now. My name is Corey Jones, and I'm a licensed real estate agent in New Jersey, and I provide New Jersey Living to provide context on the New Jersey market. So if you're interested in some really insightful data, not a whole lot of flash or fluff, this is the channel for you. My role is to definitely provide services that are of value for people who are looking to buy and sell like yourself. So if you're looking for data like this, be sure to click like, subscribe, and the notification bell. We're coming this way weekly with more data points like we're going to present today. So let's jump right into it. We are in the late summer now at the time of recording. So we're entering that late August time frame. We're going to look back to our June data points because July is still being finalized. We know for certain what happened in June. And why is June that important? Reason being is that July reflects a lot of the spring activity. I would say the bulk of the spring activity is going to be reflected in June. I mentioned July. June closings and July to an extent as well. So we'll touch on that probably another month or so out when we have that full data. So for June gives us an idea of what the spring market, which tends to be the most active market of the real estate year. And we're going to take a look at some year-to-year data. We're going to compare year 2025 to 2024 to get an idea of what, if we were taking just one snapshot of the early summer time frame of last year compared to what it was this year. And this is what we are seeing. So what we're going to cover are 5 key metrics. I'm going to flash up one of these metric charts just so you have a reference of the locations that I'm referring to. We're not going to look at every single one of these charts extensively. We have some other visuals that we're going to look at as a deeper dive reference. But this chart is just giving the closed sales by percentage in June of 2024 compared to 25. But you see the towns that I cover at the bottom. So at the very bottom, if you refer to this group of towns, we have a total of 10, I believe. Actually, it's 9. But these are what I call bellwether markets because for each respective county where they are located, they tend to be high volume locations where a lot of purchases take place. So these charts are going to give us some data, 5 categories we're going to look at. This one right here is reflecting closed sales. We're also going to look at days on market, median price, inventory in terms of number of sales for that market. And we're also going to look at month supply, which tells us what is the available inventory. And why that is very important is that the more inventory that there is available, that provides more selection to buyers. That tends to drive the number in terms of what type of offer is being given on properties, because buyers have choice, then they don't have to compete as aggressively for a given property when there is lower inventory. So we're going to dive into that a little deeper once we get to that specific metric. So as I mentioned, we're just going to take a quick look at some of these charts. We see that when we talk about the first one, which is with closed sales, we see percentage from year to year. We can see 2 of them jump right out in terms of the graphs. We see both Bridgewater, which is in Somerset County, Freehold, which is in Monmouth County, a 53% jump in terms of year to year, how many units closed. Those that were down significantly, we're looking at Ridgewood, which is one of those really high demand locations in Bergen County, one of those premiums, because when we do a lot of our conversations on premium markets in New Jersey, Ridgewood is one of those names. If you've seen any of my recent episodes when we're comparing some of those really, really high demand suburbs. So Ridgewood down 43%, and Union, which is interesting. We're going to see some of these numbers are not going to full story, right? So we've got some mixed data here. So it's important that we not lump every one of these markets into the same bucket, but really try to figure out what type of market is in each of these locations. And keep it in mind too, not every location that we look up here are comparable, even in terms of the general price point. So you'll know that you'll be able to get bargains in Union relative to, let's say, Bridgewater or Ridgewood or Princeton for that matter. All right, so that is foreclosed sales. Let's take a look at our next data point. Next data point, days on market. And days on market is very relevant because we want to get an idea, are properties staying longer on the market in some of these locations, or are they moving faster than they were last year? So we flash up this graph and we see the days on market, and what we notice right offhand is that we have seen a little bit more activity in terms of percentage changes from one year to another compared to the first one. But the standouts here are Freehold and Parsippany Troy Hill. So we get an idea of what is happening with how long properties are on market. We're going to pull up Freehold here. So we're going to take a look at Freehold, and I'm just going to flash up the table where we receive the data. This is straight from New Jersey Realtor Association of Realtors. This is showing that, for example, Freehold in June of 2024, your average days on market was 17, and in 2025, average days on market 33. So it virtually doubled, right? So properties are sat on market for a longer period of time. And look at this as well. This is why it's important to match up some of these data points and its relative location still. Okay, so 17 to 33 in terms of days on market. Let's take a look at the median sales price, although we're not diving in on that particular metric too deep quite yet. But in this case, we see Freehold goes from 875 to 757 with median sale price for the month of June year to year, right? Longer on market. Also, there is a drop in median price. And then we go back a little bit further. We look at inventory, right? Inventory of homes for sale. 2024, we're talking 34 in the month of June. 2025, 48 for the month of June. Okay, so we see there is correlation. When you have more selection, you're going to have more opportunity as a buyer. We see a drop in median price, and we see that homes are on the market much longer. So let's go back to our general map, not to dive too deep in that one quite yet. We see that some of them are on the market a lot longer. On the flip side, those that are moving faster, we see Princeton at 67%. And then we have some others that are all relatively close: Bridgewater, Edison, and Wayne. All right. So if you notice as well, each of these townships, I strategically selected one for each of the counties that were really closest to New York City. Of course, I did not include Hudson County because we are focusing here on single family homes. And Hudson County is really a location to have more of a conversation on multifamily as well as condo. Not that there's no single family options there. There are plenty, but those are heavy condo and multifamily markets. So I did not include Hudson as one of our list here. So we see days on market. Many of them are still, in relative range of what happened the previous year, but three of them significant standouts in terms of how fast properties are moving. We'll move on to our next metric. All right, metric number 3 is probably the one that really attracts the most attention. This is like the flashing lights one, median price. Where are prices dropping? We look at this right here and we see that there are, and all of these are higher demand markets because of volume and activity, right? So by high demand, it doesn't mean luxury, really doesn't mean discount either. But what it means is that these are higher number sales relative to the location. Now, Princeton is the one exception because it's not super high volume for Mercer County. Mercer County, you're going to see a lot more sales in some other communities, but Princeton certainly is that attraction market, if you will, for Mercer County. So when we look here, change in price change, we can see that some of them are still bumping up. We see Edison, we see Union, and we see Wayne. All right. We see still an uptick or an increase of year-to-year median price. But the others, although it varies in terms of degree, some of them are like, for example, Bridgewater's just 0.6 below, all right, year to year. And Parsippany Hills, Troy, 1.5 and 0.3. But big picture is, keep in mind, our state average is 8%, 8% appreciation from year to year. Okay, so what we see for Wayne is what we typically see annually, about 8% average for the entire state. But there has to be give, and I've been saying this for some time, there has to be give somewhere at some point in time, because when you think about it, salaries do not increase at these percentages that homes are increasing in market value. They're just not. So at some point, there has to be some pullback. We were at 18% back in time of COVID, right, which sank back to like 8% where it is right now. But we see some markets, again, this is just a snapshot. So keep in mind, this is not our full year average. This is just 1 month, but a critical month, though. We're talking about that month that's coming off of that spring surge season. So Freehold, where we're seeing the drops, Freehold, Princeton, and Ridgewood. All right. Now, Princeton, as we're going to see shortly, it's not a really high volume number that we're basing at. Actually, Princeton's probably the lowest of sample size. So we'll go ahead. Let's do that now. Let's flash up Princeton. Princeton year to year. So here we see Princeton, and we are looking at 5 closed sales for 2024, 5 for 2025, even wash. All right. We see that days on market, there were 64 days compared to 21. So those 5 this year, those 5 went pretty quickly. Well, actually lightning fast compared to last year. Now, then you see the median price. So the median price, 1.8 down to 1.4. Now, this is the backup again, and let's talk about our sample size. Our sample size is at 5, and Princeton is a market where you can easily have a $4 or $5 million home that can totally change the dynamic of where that median falls. All right. So I would have to pull up all 5 properties from year to year, which I did not. So this number can be a little deceptive, quite honestly, because it certainly does not reflect by any means that there is a 22% drop in home prices in Princeton. That's just not the case. If that sample size was like 20, we'd be having a different conversation. But 5, given how these luxury or higher demand markets with that kind of price point, you can have 4 homes that were priced from $1 million to 1.5 million easily, and then just land somewhere around that 1.4. And conversely, you could have had last year 2 properties that were over 3 million, and the others were just at 1 million, but it set the numbers, it skewed the numbers. So I think you get my point. So I don't want to reflect that. Let's go back to the metric table. It's not like there's a significant, I'm going to kind of treat that with a grain of salt. Ridgewood is another one, that extremely high volume numbers, but that is relevant though for Ridgewood because our numbers, overall volume sales were higher than that of Princeton. But we see that numbers are not coming out astronomically high. Notice that we have no double-digit increases year to year with these. All right. And we see an even balance pretty much. I mean, with 0.6 and 1.2 and 0.3, those are almost neutral. Let's say the 1.2. Let's keep the 1.2 out of that. Bridgewater at 0.6 and Toms River at 0.3 are almost neutral, right? So by and large, we are very, very even in terms of markets. And again, these are the bellwethers, markets that are appreciating in terms of value versus those that experience an actual drop. Something to take note of for 2025. Metric number 4 is inventory. We flash that up. We look at inventory numbers. So inventory increases, obviously that has impact because it provides more option to the buyer. We would expect with inventory increases for price above list or sales price above list price ratio to shrink, right? So that you don't have to be as aggressive. And in some cases, we really would assume that median prices would not increase too substantially, if not take a little bit of a tick down. So here we see with inventory changes, Freehold is leading the pack here, right? Over 40% more, right? Options to choose from. For Wayne, 37. For Union, 27. There's been even more inventory in these markets, and these are pretty significant. All right. Then those that had the drop: Bridgewater, Parsippany Hills, Troy, and Ridgewood. So these are some pullbacks. I'm going to take a look at Parsippany Hills, Troy as well. Data set to show us that inventory, 56. So there were 56 homes for sale, 2024, month of June, 41. All right, 56 to 41. So took a drop in Parsippany Hills, Troy. The median price did shrink, 765 to 756. Right. And let's take a look at percentage of list price received. So Parsippany Hills, Troy, it went from 110%, which means 10% above list price was the average for 2024 in June. Fast forward to June of this year, that shrank back to 7.3. Inventory, again, there was a shrink in inventory. So less inventory, but even with less inventory, this is why we say it really depends on market. Inventory actually shrank, but with that, we still see a decrease in the median as well as list price, sales price ratio. Very interesting. All right, so let's get back over here. So Parsippany Hills, Troy, we see a shrinking of inventory. Ridgewood, we see a shrinking, and some of the others are pretty close, relatively close to being neutral. Now let's skip over to our final point and get into what this means for buyers and what kind of our overall analysis of this data. What is it telling us? So with month supply, we are effectively talking about absorption rates. And the absorption rate is basically a reflection of homes that are available on the market, in comparison to those that are being sold. All right. So as long as your absorption rate is below roughly about 4, a factor 4, then we're talking about a stronger seller's market. We've been somewhere less than 1 on average in most of our episodes, but these are reflecting that the number is increasing, and increasing supply means a better opportunity for a buyer. Here we see that, and this is going to be, again, the absorption rate change. Positive means there's more inventory. Negative is that there's less. Wayne is at 50%. We're going to take a look at Wayne in just a minute. So Wayne is a clear standout here with an increase of supply. That's not reflecting sales, though, keep in mind, right? So that's just saying what was available during that month in comparison to what we see that sold. All right, so Wayne is at 50%, and it is by far the leader. We see Union, again, having that increase in volume, I should say volume of inventory, along with Edison and Freehold. Those that were negative, like fewer inventory, we're talking Parsippany Hills, Troy, and we're talking Ridgewood, and Bridgewater's numbers stand out a bit as well. So let's take a look at Wayne. So with Wayne, we take a look, and Wayne in 2024, month supply is 1.4, and that took a jump to 2.1, 50% increase. All right, we look at the inventory of homes for sale, 45 in 2024, 62 in 2025. Again, is interesting here is that even with more selection, even with more choices, your median price still goes up in Wayne. And that's where you have to really focus in on what that market is. And Wayne is that high demand of a market. And why? We're talking big 3. Okay, so you all who've been watching me for some time, you already know what this is and where we're going. Big 3 are the factors that drive demand in northern and central New Jersey. And by northern and central, I'm really talking about those that are in commuting distance to New York City. Once we get to South Jersey, now we're talking Philadelphia, right? We're talking about the extension of Philadelphia suburbs. But we're talking proximity to New York City, and my general guideline is about an hour drive to Midtown Manhattan. The other thing that we're looking at are local train stations. So a train station, when I say local, I'm saying within the municipality, okay? And Number three are school ratings, which I refer to niche.com for the school rating grade. Anything that's A minus or A plus is going to be a high demand district. Not that B pluses are bad, but that's just the reality of what a lot of parents are looking for when it comes to school selection. So Wayne is one of those locations that hits in a significant way the big three. Checks off on the big three. So even with more inventory, Wayne, percentage of list price, it took a little bit of a dip down, right? So list prices have increased. They didn't even get list price, a little bit less, right? But with all that being said, median sale price is over 50K higher from year to year. But this is an example just to see how those numbers translate for this specific community. So these are the 5 factors that we were looking at in terms of measuring where we are in this market right now. And it can be definitely categorized as kind of that Goldilocks kind of situation. Too hot, too cold, just right. There's not one given metric that we can throw out there to say definitively seller's market is over, because that's just not true. Are we in a buyer's market? No, but it's a lot more friendly right now than it has been in a long time. All right, so let's take a look and analyze some of this big picture kind of viewpoint. Before we take a look into the leaders of various categories with these different breakdowns that we're doing, just want to make sure I offer a couple opportunities for buyers that are out there in the market right now or planning to engage in the market in the near future. Have a QR code for you just to provide you with an overview, I should say, of the purchasing process. And my team is here to support you in that process should you need help or you just need questions answered. So that QR code is for you. Another buyer QR code is for those who are moving into the area from outside of New Jersey, in some cases outside of the region or even the country. For homeowners, we have a couple resources for you as well. QR code for a complimentary CMA, because you should know your value at all times. Every year, you should have at least this one thing done every 12 months, and that's getting a current market analysis of your property that is done complimentary, no strings attached, no requirements whatsoever. Also, for homeowners who are what I call cash curious, you just like to know what an investor would pay for your property today if you were presented with an offer to really sell quick, fast, and guaranteed. We have the ability to connect you with investors that will give you an offer that you'll just know what your price is. Again, no obligation. So this QR code is for you. Feel free to reach out. That information we can get to you within 48 hours. So with all that data, what we have done is prepare what I call the market opportunity map. So we're looking here at some of these leaders in different areas. So we're talking volume, just flat out how many homes are moving from one year to the next in given markets, knowing what that activity is. So we see that in terms of the jumps, Freehold clearly is the leader with 53% increase of volume from June to June, followed by Bridgewater and by Bloomfield. And you see there's pretty significant number differences in between those 3 different communities. But this, you just have to know that what the trending has shown is that there is increased volume in these communities that does not always reflect higher prices also, because we're factoring also inventory. We're also factoring in where a given price point was. So what I will do in this case is let's go to Freehold. So we're going to take a look at Freehold and take a look at just a sample of some of that recent June activity in terms of a recent sale. All right, for Freehold, what we're going to look at is a sale that happened in June of this year. This is 14 Reed Way. We see selling at 740, 6% below. So I've tried to find something that was kind of reflective of the data that we have on Freehold, and that we do see a shrink back of properties that sold below list price, 59 days on market. So we see here a 7-bedroom, 3.5 bath. And this is reflecting something that would be By Northern Jersey standards, certainly would be more of a relative newer build. I'm going to see if they have the year built. There we are, 1993. So some places in the country, you think 1993, well, that's not a newer property. In Jersey, when you have properties like you're in Jersey City, there's some things that have been built back in the 1880s, 1890s. That are some of these brownstones and brick structures that are still standing and doing quite well at that. And then a lot of inventory even in the suburbs that are before World War II, right? So this is relatively new. But you can see that this is a newer build, 2-car garage, 4-bed, 3.5 bath, almost 2,300 square feet. All right. So this is something that's reflecting what did in fact happen in that market. So our 30,000 view assessment of these 5 factors, flash this up just so we'll take a quick review of what we just talked about. Overall, closed sales is up by 5.3%. And again, these are for our bellwether markets. This is not for every location in New Jersey or the state averages. These are my curated 9, right? Bellwether type of markets that give us an indication of what's happening in the market with higher volume / high demand markets. So 5.3 increase in closed sales, days on market. All right, properties are 10%, right? In terms of increase, more time. There's more time these properties are sitting on market. Median price has retracted. So we're talking about a 3.1% dip in median price, June to June. All right. Inventory has increased by 7.2%. And month supply has increased by 1.5%. That doesn't seem like a significant jump, but it is a meaningful one because we can see how that definitely has an impact on median price and days on market. So let's take a little bit of a closer look in terms of what this means for those who are looking to buy. And if you're someone who's looking to sell, this is relevant for you as well, whether you're currently on market or if you're starting to think, maybe it is that time that I need to move on, right, from my property or look for another opportunity or just explore what your value is. Our next category, speed leaders. These were properties moved and they moved very quickly. We have Princeton, we have Wayne, we have Edison. So Princeton is the outlier here, 67% compared to Wayne at 27 and Edison just short of 21. But again, Princeton reflected a relatively smaller sample size of only 5. So with those, and I'm not going to dive into a specific property on every single one of these, but we get the picture here that these markets really reflected their properties as just still not lasting very long. Price appreciation. So where did we see prices still continue to climb? So we see another common name here in the top 3. We see Edison once again. So we see Edison, we see Union, and we see Wayne. So Wayne is something sold fast, still appreciating price. We kind of mentioned that a little earlier, and that Wayne had an increase in appreciation of property. So that does warrant us taking a look at least one of these. So let's take a look at a given recent sale in the month of June that fell right in these numbers. For Wayne, we're looking at 7 Melanie Lane, sold again in June. Sold at 815% above list price, 25 days on market, 4-bedroom, 3-bath, just over 1,700 square feet. So not extremely large property, just over a third of an acre. Year built on this would have been, all right, don't see readily year built, but year built based on the looks of the property, probably 70s, 80s, most likely, right? But we can see, again, relatively fast sale, 25 days on market, and 15% above that fits conveniently into the numbers that we are looking at. So it gives you an idea on Wayne. All right, so we have so far volume, we have speed, and we have appreciation. Now we want to look at some of the inventory surges. So again, we see Freehold, we see Wayne, 2 of those same communities. We see Union continuing to show up. All right, so Union is just one of those markets that is going to always have a higher degree of both demand, volume, sale, because it has that sweet spot, if you will, of inventory between 450 and 650, where a lot of buyers qualify. And when you factor in proximity to city, train to the city, schools that are not the high demand elite schools, but schools that really carry a solid reputation, Union hits that fair middle ground that attracts a lot of buyers in this market. So inventory surges, we see Union showing up again. All right, so this gives you a little bit of a view of market opportunity based on where you either want to be, what you are attracted towards, or what you want to maybe avoid. Okay, so with all that said, we have the buyer's strategic blueprint right here. This is where we're going to just assess what you're looking for as a buyer, and there's different viewpoints to take. So first, tier one, sweet spots. These are those markets where you're looking at Wayne, which we call the Triple Crown winner, has appreciation. They're moving very quickly, and we see that inventory is also increasing. So it's not as though you have like, all right, I only have a few opportunities in Wayne. You have enough. You're going to have to compete for it, but you have increasing opportunity that's there. Value, like I mentioned before already, Union gives you that opportunity to not have to be a $700,000-$800,000 buyer and still find opportunity. Our tier two is volume. All right, so your volume play when you are considering how much selection you have, how much negotiating power. The more the selection, the more negotiating power that you'll have. Freehold is at the top of the pile when it comes to this, and Bridgewater presents a similar opportunity. Tier three, we're talking efficiency. All right, so efficiency means basically, look, you don't have a lot of time. You have to be very, very ready to pull triggers and be competitive. So Princeton was one of those, which again, I'm a little soft on Princeton with this data selection because the sample size is small. All right. Edison, definitely something that moves very quickly. All right. So if you're looking in Edison and that market in general, you need to be prepared to move and to act fast. And then we have the patient play markets where days on market properties are there for either opportunity for days on market inventory, whether it's up or down. Properties are simply sitting for some time. All right, gives you some opportunity to come in and to negotiate. Now, what I do have just available upon request is a strategic action buyer profile, depending on what you're looking for, what your time frame is, what your budget is, what your location is, or desired location may be. I'm not going to review this right now, but I will send this to you. All right, just upon request. You just need to email me. I would say DM me, but it's just a lot of comments that I often respond to. It's best to either text me or to email me to request this particular profile here, because we're going to move on to the next section. So far, we've covered a lot of buyer-centric analysis and information, but for sellers, it's information that's relevant to you as well. If you are someone that's looking to prospectively sell and you're still watching the video up until this point, one, good for you, because you need to understand what buyers are thinking, exposed to, consuming, how they're approaching the market, and my videos give a lot of that. It also provides a lot of context and support for sellers. So sellers, the days of List Friday sold over the weekend, by and large, they're gone. All right, so you're anticipating to definitely have a more time frame on the market. Buyer aggressive offers are not what they were, not even 8 to 12 months ago. So that's something to be prepared with. And that also is part of what you're considering when you are creating your strategy. And there should definitely be a strategy as to how you want to market your home. When you market it in terms of time of year, even down to the time of week, you still want to give some time to be prepared for that first open house experience in terms of exposure of the property. You want to also consider how well of the aesthetic appeal that you're doing in terms of your marketing of the property. So do you consider staging? And staging is not always people bringing in furniture, but as I've done in one of my episodes and had my primary stager on with me, it's a matter of how you restyle or redesign, recraft your home for the best aesthetic, right? So some of these and some of the other tools that we use as real estate agents, those who are effective on the marketing end to give the best presentation for your property. So some of these things are absolutely part of the conversation. Pricing is going to be strategic. We're not in the bidding war phase where you can just throw out a price that just attracts the most people and just let them bid up from there. So it warrants being a bit more strategic depending on what your timing is, what your time frame is, your flexibility, and your ultimate net proceed, that target price that you really are pursuing. So all that is going to come into play as to how you want to price the property. And negotiation, right? So the negotiations, they're not what they were 8 to 12 months ago. So you may need to be a little bit more flexible on what you're willing to negotiate on in terms of repairs or concessions or buy-side contribution in general, whether that be to buy-side commission contribution or to just buyer assist. And that assist can go wherever, closing cost or what have you. And that also brings the question, are there some things that you want to do in advance that will not come up in a repair kind of negotiation because you just touched up some things that were more feasible and efficient to take care of in advance than letting it be flagged in an inspection? So these are all conversations for sellers to engage with. Again, I'll be happy to give just general feedback, some market activity, some recommendations. If you need that kind of insight or just curious, you're not ready to do anything yet, but just to bounce off some ideas, by all means, reach out. There's no charge for that. I'll be happy to share some insights with you. So the final conversation is about what are we looking for ahead of us? We are now late summer entering fall. We are going to get another Fed report or Fed action or no action. It's anticipated right now that we'll have a Fed rate drop of about a quarter to half of a point in September. We'll have to wait and see. The economy is still a bit uncertain right now, and uncertainty is not good when it comes to economic conditions. Are we approaching recession within our economy, potentially looking at a scenario where people are just going to pause on buying because of the economic conditions? Now, in locations like New Jersey, again, we are densely populated. Our population compared to available housing is still very, very low. So there's still going to be transactions out there no matter what, but it's just a matter of who is still in a position where they are ready to engage in the market and take on an opportunity. Rates we see are trending downwards right now in anticipation there is going to be a rate drop. So just rates, by the time they do happen, rate changes in general, the real estate market or the mortgage market, I should say, in terms of like finance, that's already adjusted, right? So those adjustments have already happened with the rates trending down or trending up. So it's not as though we are waiting to see something and then the mortgage rates have some type of dramatic change the next day or the next week. They're already being accounted for now. And we do see a drifting downwards right now of interest rates. So fall season is that next season where we see surge in activity, surge in listing inventory. Spring is one, fall after everyone is into school and that fall season has started and people are back to their normal rhythms of life coming off the summer. We see more activity late September leading all the way into mid-November. So those are things, both the rate and that activity, we're waiting to see what is going to happen. And that's not just New Jersey, that is nationally. These are some things that we're going to keep in mind, also always factoring in some of the developments that are coming into play, whether it be infrastructure related. There's also policy changes that we always, in New Jersey specifically, are monitoring to see where there may be new homes that are being built or there are changes within communities in terms of permits or what's going to be allowable or not allowed in terms of new housing opportunities for development and construction. So those are things that we're always monitoring. So, but right now we're not too hot, we're not too cold, right? But are we just right? That's relative to individual buyers. But again, if you are someone that's in the market right now, definitely reach out. I would love to be able to provide whatever resources I can to assist you in that process. If you're someone who is, considering selling, or you're just like I mentioned before, if you're an owner and you just like to know what your value is, definitely reach out. Yeah, I'm not looking to basically hound anyone, just here to be a service and a resource. Definitely appreciate those who have tuned in today. Be sure to click like, subscribe, notification bell, stay updated on content like this that's coming your way on a weekly basis. And finally, as always, stay safe and stay tuned to New Jersey Living.